Welcome to this vlog, and growth stocks actually can go really well, at least in the bull market. But if we have a crisis like this around, growth stocks can lose all their gains very quick, even quicker than they built those gains. However, there is three growth stocks that we will talk about today that actually benefit the current crisis, and what they do, why they grow, and what we need to know about the risk investing in these three companies. All about it. Welcome to the show. First of all, make sure to hit that like button. That would be super important for me and YouTube algorithm. As you know, much work goes into this YouTube videos, and the first stock is quite interesting. The first stock is Zoom. Zoom is providing software that let you video conference with your colleagues or your friends or anybody around the world. Now, what is really crazy about it that, we have those video communication softwares already. We have Skype, we have Microsoft Teams and so on, but somehow Zoom is really working well and is really popular around the home or working from home community. Now, if you're looking into the stock, especially when all the crisis moved on, like about February, we can see a spike of 115%. And then we had a couple of bad days just recently, but we will talk about that. However, this company has a PE ratio of 1353. This is obviously very high. Usually growth stocks has either very high PE, like in this case Zoom has, because the market stock price is quite high and the profit is very low, or they don't have at all PE ratios because they actually don't make money, and then you cannot have a proper PE ratio. However, we just lost about some kind of 22% since the beginning of this month, and this is mainly because Zoom has one problem. Apparently there is a security problem. There's also the Zoom bombing, where people create meetings online and then they actually get bombed by someone that gets the meeting ID, and without the password, just go inside this chat and show some naked persons and so on and so forth. So very funny. However, they apparently have also a security reason, and that's why NASA, SpaceX, all this company have banned Zoom for commercial calls on this platform. So, however, this is the downside. Let's have a look now into the revenue and revenue growth, because in the end we are talking about a growth company, so you need to look into some growth numbers here, and actually the growth is pretty huge. If you're looking into the revenue, there's a great website, macrotrends.net. It's showing you revenue ratios and all of this, so I can just recommend this. So if you're looking here into 2018, we had $150 million revenue, and then we increased this to around 330 million revenue. It's in 120% almost. Then it increased it again 100%, and then again 88%. And I believe the next quarters and this year will be absolutely insane, because there's also opportunities obviously in these companies right now, because the consumer behavior will change. We will rather in the future say, hey, should we really drive this 100 kilometers or 100 miles, or should we not make our meeting over Zoom? And I tried it myself just the last days. It works super well. It's super interesting. So check it out. I still think that once everything is settled, that Zoom will, lose some of the sentiment, obviously, because lots of traders going out and taking their profits. But long term, I think Zoom is a really interesting play. The next stock is something that I really saw a couple of months ago and just popped out during this crisis because it's super innovative product. So Teladoc is offering, let's say, something like Zooming with your doctor and talk with him and talk about your symptoms. Seeing him, he can say, hey, show me your eyes, or which you can talk with him and don't have to wait in the waiting room. You don't have to, go to the doctor. It's much cheaper. He can prescribe you things. So it's a crazy, interesting, innovative product in the health business. And even Donald Trump mentioned Teladoc in one of his PR releases that he gave in his conferences, and the stock just shooted up. And if you're looking into the chart here, the PE ratio is not available because they don't make any profit. However, let's see, in January until now, also the stock in the all-time max made 100% gain. And this is obviously also very interesting. Also, they have the risk of dropping, obviously, after we all are back to normal, and therefore, I want to also here go inside the revenue for you. So we are now in the revenue growth numbers and revenue numbers of Teladoc, and as you can see, you have 233 million revenue in 2017, which was like a 90% increase. After that, 80%, 30%. So they slowed a little bit down over the last years with the growth. However, I think this year and also the future of this company will be absolutely insane. I don't see big downturns or risk on this one, but still, obviously, I think that we shall see some return movement after all this is done. But actually, I see a very huge opportunity for Teladoc in the future to be used by more and more people, especially the people in the US. I think the health situation and health system is very special and very expensive if you are not properly insured, and therefore I believe such a easy and cheap option is very good. Last but not least is one of our stocks that we mentioned in one other vlog, but I want to emphasize this as a growth company obviously as well. They went into fame with their controversial Christmas advertising. However, just to describe this company, they are producing and delivering and installing treadmills and bicycles, so you can do gym at home, especially the cardio part, and then you have screens, you can attend online classes. So a very interesting concept, and they are actually not that benefited so far from this whole run. As you can see, also no PE ratio, but in the beginning of January they were around 29 or almost $30 per share. They went down even with the overall market 34%, which is the average decline that the stocks made over the period. But then also did a couple of returns in the last couple of days with 33% up. However, they are almost about 12.5% that they lost since January. I heard that one news that will impact this company is that apparently, I don't know if it was the treadmill or the bicycle, one of those cannot be delivered because the delivery guy need to assemble the product inside the house, and this is not possible during the social distancing, and therefore they are losing maybe even a potential part of their revenue, and therefore I believe that maybe a little bit cautious about this one, because obviously you have the opportunity to go up with this stock, because if you're staying home, if you cannot go to the gym, this is a solution for many people, and I think they will have a lot of sales in this quarter during this whole situation. But let's have a look quickly on the revenues. Okay, so in macro trends, they are not available, but I just looked it up here in Google. So apparently they made a 110% increase in revenues in 2019, and also they grew revenue 99% in 2018, so around 100% every year they are growing, making around maybe about $1 or $2 billion revenue. So interesting, definitely to follow. Their also revenue stream is subscriptions to programs. So in general, very interesting concept for working out at home. So a quick summary here. Obviously, these three stocks are growth stocks and can be very volatile. So be and trade with caution. They had a huge run up already. They can even go higher, but they can also go lower. So maybe if you want to really invest and have pieces of this companies, wait until we lose a bit from the top and then reinvest, especially in companies like Zoom. I think that Zoom will definitely have a future if they also finish all their security reasons and problems that are currently in the news. This is obviously very bad news for the company. That's why the company is down. Maybe use this to pile up the stock, but the product is great. I rather use Zoom in the future than Skype or anything else. You know, think about it, try out the product where you can. Teladoc, if you're in the US, try it maybe out and see. I'm always a fan of trying the product first before investing, making your research, make your really deep analysis of the market, and then when you're sure, make sure to leverage always your position in terms of don't go all in at once. Go step by step into positions and use downturns to build a great portfolio. And here you can do it every day. Subscribe and like, and I see you tomorrow.